A $10 trillion bomb is about to go off in the financial system that could cause ripples and cause havoc throughout the global financial system. That's the topic we're going to dig in today. I want to show you exactly what is about to transpire because it's that big and you need to be prepared for it. Now, to put this into perspective, we always reference the 2008 Great Financial Crash, the GFC, the global financial crash, when, of course, it was Lehman Brothers in the United States, the investment bank that failed, they went bankrupt, and then it just sent a cascading effect, a domino effect, if you will, to topple, to cripple the entire global financial system. Now, at that time, Lehman Brothers was about $60 billion. To put this into perspective, $60 billion. Now, again, to put that into perspective, that's the same size that Terra Luna, the cryptocurrency stablecoin, was when it blew up just a few weeks ago. $60 billion. Okay, today we are talking about 10 trillion. All right, now 10 trillion, not in US dollars. So let's dig into this. So you can see on my screen right here, Bank of Japan spends a record 81 billion to avert collapse, but 10 trillion JGB market is now completely broken. So this is not $10 trillion, it's 10 trillion yen, which is a little bit different. It's about 300 billion US dollars, but it's still a massive number. You can see here it says if the current pace of buying persists, the bank will have bought approximately 10 trillion in June. To put that number in context, it's equivalent to the Fed doing 300 billion of QE per month when adjusting for inflation. So what's going on here? The government of Japan is doing QE, quantitative easing, similar to how the United States has been doing QE, except for Japan's been at it for much longer. Japan is about 2 decades ahead of where the United States is. That's why we talk about the United States, the Japanification of the United States, which is Japan leading the way, the United States is following. Now, we pay attention to Japan because, like I said, they're doing the same things we've been doing, except for they've been doing it for about 2 decades. And so what's happening to them is most likely what is going to happen to us at some point. However, if this blows up, it could suck everything down with it. So let's go ahead and keep digging in here. What's going on is that every other central bank in the world, including the United States, ECB, et cetera, is tightening their policy. So they're done with the QE and they're tightening. That means they're raising their rates and they're not buying all those bonds or they're letting them roll off. And it's one of the reasons why we've been bearish on the yen. Many have argued that the currency intervention in this environment is simply not credible given it's the BOJ itself that is cause of the yen weakness. So it's even worse here. It says its policy goals as some of the largest hedge funds in the world pile on billions of dollars in bets that the Bank of Japan is about to lose control in a repeat of a Soros dramatic crusade against the Bank of England. So what does this mean? So George Soros, he famously got rich, made $1 billion in a single day for breaking the Bank of England, breaking the peg. And so that's what traders do. All right, there's corporate raiders on Wall Street since the 80s. Of course, we've seen this happen with GameStop and even back to the Terra Luna and maybe even the Celsius situation we have today in the crypto space is that traders are going to do what they're going to do, and they're going to try to go after these. Anyone who's trying to artificially manipulate markets has to suffer other people coming and attacking that. And so when they're artificially trying to keep something alive that doesn't belong, so for example with Celsius, if they're trying to keep that propped up, but everybody knows where their liquidation events are, and so they're going to bet against that. And that's exactly what's happening here. They're betting against the Bank of Japan, betting that they're going to collapse. We can see here that it says a week ago, we described how after 4 straight days of declines in Japanese bond futures, the central bank announced unlimited purchases of so-called cheapest to deliver 10-year notes. It was the securities with the closest link to the contracts, and that sent the spread between the futures and bonds, underlying them soaring to the widest since 2014, which is a massive shock for traders with positions between the two. So what's going on here? The governments need money, and they do that by taking on debt. They take on debt by issuing bonds. Now, the problem is if nobody wants to loan me money, then I have to continue to pay higher and higher interest rates. That's the yield. And so would you loan me money for 5%? No. How about 10%? No. How about 15%? How about 20%? So eventually there's someone, okay, I'll loan it to you for 50% interest, right? The problem is that the Bank of Japan can't pay 50% interest. So they're committed to keeping it at 0.25 interest. That's what they're committed to. But of course, who in their right mind would loan money to the Bank of Japan at that crazy low rate? And the answer is nobody. And so the Bank of Japan is printing money in order to buy all the bonds to keep that interest rate low. The problem is that as they continue to do that, it's ruining the dollar or the Japanese yen. So let's take a look at it through some charts here. So what we have right here is a chart that shows you this. It's what's called yield curve control. So the yield is, again, the amount of interest that's paid on the bond. And Japan has been doing this a lot longer than anybody else. And so they're trying to control the yield, as you can see on the screen, to 0.25%. Now, what we can see here is that they're going to buy all the bonds they have to in order to keep it below that level, which you can see is highlighted here with this blue line. But what's happening here is that you can see it's starting to spike up. These are what's called wicks. And so this means the price is coming up, and then they're quickly smashing it back down. The price comes up, and they quickly buy as much as they can to bring it back down. So this highlights the struggle that the Bank of Japan is going through right now, trying to maintain this peg. But just like the Bank of England, and like I said before with Terra Luna, all pegs are meant to be broken. And this shows us right here, if you see this chart right here, this shows the amount of bond purchases that the Bank of Japan is having to do to defend that yield cap. And you can see going back to 2001, they were doing a little bit of purchases. And you can see that number was pretty flat from 2001 till about 2010, where they really had to step on the gas pedal, and they started doing a lot more bond purchasing to keep those bond yields down. And then here about 2015, it really shot higher. And look where we are all the way over on the right-hand side. Look at the amount of yen that the BOJ, or the amount of bonds that the BOJ is having to purchase. I mean, it has spiked all the way through sky high, and that is because of these wicks back on this chart. They're having to buy that many to continue to smash that back down. Now, if we look at this chart right here, this is all the different bonds that they have over different terms. So a 5-year, a 2-year, a 10-year, 15-year, 30-year, etc. And what we can see in this chart right here is if you look over on the right-hand side, it shows extreme volatility. So you can see these lines are going up and down, up and down, up and down at a frantic pace. And this is because all of the traders are coming after this, trying to break this, and the Bank of Japan is trying to hold it down. Now, what's at stake with all this? What does this really mean to you and I? I don't live in Japan, and I don't know if you do either. So if we don't live in Japan, why do we even care about this? Well, let's take a look at that. Japan has a massive amount of debt. Now, this chart is only up to 2014, so it's a little bit outdated, but I liked it because of the visual it presents here. Japan is now about 266% debt to GDP, so obviously higher than here. The United States is about a little over 100. I think the U.S. is about 126 right now today, so it's a little bit off, but it represents how much debt they have. And of course, if these bond yields spike, they can't afford the interest on this massive amount of debt that they have. Now, what's happening is this is the Japanese yen. This is their dollar. This is their currency. And they're having to print an unlimited amount of their currency to continue to buy the bonds to keep them down at that 0.25%. As they do that, and this is what happens when you print an unlimited amount of money to buy your own debt, sort of like a snake eating its own tail. You're going to lose one or the other. Either the bond market is going to blow up, which Japan is committed to not allowing the bond market to blow up, and then if you don't let the bond market blow up, then your currency implodes. And that's exactly what's happening. You can see the Japanese yen priced in US dollars has fallen through the floor. As a matter of fact, we haven't seen it this low compared to the dollar all the way back here since 1998. And before that was all the way back in 1990. And so it is completely plummeting. As a matter of fact, you can see right here, it's down 25% in just a short period of time against the dollar. Now, we're comparing one fiat currency to another. Now, the dollar is also losing purchasing power to things that really matter. Real things, things like food and energy, things that really matter. So if the dollar's losing ground to real things, and the Japanese yen is losing ground to the dollar, well, then how bad is it really getting? What we can see here is if we look at Japanese yen compared to commodities. So the commodities are the real things, right? The food, the energy, the precious metals, et cetera, et cetera. And so what we can see here is that if we look at the yen priced in commodities, it has completely crashed. This is what you would consider hyperinflation almost, I think. Look how bad that is going. So not only are they barely able to hang on with the bond market today, all of the traders are piling in to break it. They're supposedly committed to saving the bond market, but at the expense or the sacrifice of their currency. As you can see, their currency won't buy you any real things anymore, which of course matters. Now, who's doing this? So George Soros got famous, infamously famous, by breaking the Bank of England, like I said, making $1 billion in a day. And the same thing is happening here. Now, what's that saying? Play stupid games, win stupid prizes. And so you want to print money like you can just create it out of thin air, and you want to artificially stimulate markets. You want to take on MMT, modern monetary theory, because supposedly debt doesn't matter. You want to play stupid games, then you're going to win stupid prizes, and you're going to find yourself in the same situation that Japan is, with bond markets that don't function, your currency plummeting, and more importantly, traders racking up positions against you. As a matter of fact, we can see here that this time is different. At least that's the view of Blue Bay Asset Management. That's the name of the company behind the veil here. One of the world's biggest hedge funds, as it gears up to become this generation's George Soros, caught in a crushing battle with the not the Bank of England, with the Bank of Japan. And so they think they can break it. It says that we have a sizable short on the JGB, the Japan bonds, their firm oversees about $127 billion across hedge funds and other fixed income products. And they said that they are shorting Japan's sovereign debt when the yen slid close to the 130 per dollar level several weeks ago. Again, pegs are meant to be broken. You're going to play stupid games. You're always going to win stupid prizes. Now, I don't live in Japan, neither do you. So what does this mean to us? What happens if Japan goes down? Well, I'm glad you asked. Let's take a look at that. So Japan is one of our big partners, as is China. When I say partners, what do I mean? Well, the United States also lives on debt, which means we need countries to loan us money by buying our bonds. Now, who's been buying all the bonds? China's been buying our bonds. Japan's been buying our bonds. What happens if they no longer buy those bonds anymore? Well, one big thing happens. We end up in a Japanification situation where we have to practice MMT, which we kind of already are, and print unlimited amounts of money to buy those bonds because nobody else will buy them. But it could get even worse than that. What if Japan is forced to sell those bonds? What if China is forced to sell those bonds? And that's exactly what's happening. We can see in this article right here that China and Japan cut, that means get rid of, that means dump, U.S. Treasury holdings as Federal Reserve hikes rates. And so China and Japan are both starting to dump them onto the market. They no longer want to hold them. We can see right here from this chart that Japan is by far and away the largest buyer and holder of U.S. Treasuries. China is second, far and away second place. After Japan and China, you can see it just drops off of a cliff. So if they no longer buy them, then the United States has to print trillions of dollars just to buy its own debt, the snake eating its own tail. Now, it's even worse if they implode, if these traders win by breaking the peg, which they will. I'll call it right here. They will break it. It's only a matter of time. And will Japan be forced to start dumping the treasuries on the market? And that's where you and I get pulled into this because, well, I'm in the United States. I don't know where you're at, but all the global markets are going to suffer because of this happen. We don't know exactly how this is going to work out. We are witnessing the first sovereign debt bubble in about 100 years. And when I say debt bubble, I mean we're seeing all the sovereign nations around the world that are going to start imploding. We already have, right? So we're already seeing Lebanon, and we're seeing Sri Lanka, and we're seeing Chile and Peru. We're already seeing them blow up. But now it's about to move up to the next level, which is going to be Japan, and then it's going to be China, and the United States could be the last one left. What do you think? Is Japan going to hold off the raiders, the next George Soros, or are they doomed to lose their peg? Let me know in the comments down below. Of course, if you're not already subscribed to this channel, please just take a second, click on that subscribe button, just real quick for me. And the like button, by the way. Give me a thumbs up if you like the video. If you don't, it's okay. Give me a thumbs down, but at least leave me a comment and tell me why. That's what I got for today, all right? It's your success. I'm out. Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.